Today, let's have a talk about where equity markets are headed. The last quarter has been fairly volatile for the markets. We have seen many days of highs and lows, with a lot of correction happening across many stocks, particularly on the mid and the smaller cap stocks, and particularly on certain themes that the market was quite bullish about. So where do we head from here? Going forward, you should expect the markets to be fairly volatile, at least for the next few months, till better clarity emerges on one, what is the earnings outlook for the market, second, what is the outlook for overall economic growth, and third, perhaps some bit of clarity with regards to the economic policies of the US given the change in government that they have had. For us, the second quarter results that just got completed and results were declared, growth has been fairly tepid. For the Nifty 50 set of companies, profit growth on a year-on-year basis has slowed down to just about 6% YOY. This has resulted that in the trailing 12-month profit growth coming down to just a little bit up in the mid-teens that's there. Going forward, we think that the profit growth should recover. This will be a function of one, improved sales outlook as demand picks up, particularly in the third quarter where there is a lot of festival related demand as well as a lot of activity on the real economy with regards to say construction and infrastructure projects, which should pick up after the lull of the second quarter, which was particularly impacted by the heavy rainfall as well as the lack of government spending due to the impending general election that's there. Incrementally, as the government spending continues to pick up and investments into various projects continues, we think the overall infrastructure related activity should continue to grow very well. Consumption should also pick up as the monsoons have been fairly good this year, and we see early signs of that getting reflected in the demand conditions in the rural parts of the country as reported by many of the FMCG companies that's there. The banking sector should also continue to do well as economic activity picks up, resulting into an improved outlook for loan growth. Overall, we think that as the earnings recovery continues, markets should stabilize, and as the correction gets done in this mid and small cap space, which had seen significantly higher bouts of valuation, markets should resume their upward trajectory after a few months that's there. However, for the coming few months, you should anticipate volatility to remain fairly high. Investors would do well to remain invested, particularly in schemes that are in the large and mid-cap and mid-cap space, and focusing more on quality stocks rather than pure momentum stocks that's there. Happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.